sold, through which financial instruments are issued. So the financial system, in one way or the other, tries to bring all these markets together. It tries to bring all the institutions together. It looks at the laws, the rules and regulations, and the techniques through which a bond is a financial instrument. A stock is also a financial instrument. So when you look at bonds and stocks, a bond is a credit instrument and a stock is an equity. So through which bonds and stocks and other securities are traded. Other securities traded can be treasury bill, can be certificates of deposit, can be commercial paper, repurchase agreement. It can be the accounts that me and you, we have even opened at the bank. So through which bonds and stocks and other securities are traded, interest rates are also determined. So on the financial system, interest rates are determined. On the financial system, inflation rate is also determined. Financial services are produced and they are delivered around the world. Me, for instance, when you come to my bank, I don't know where you bank. ABSA, formerly of Barclays, this bank, you can put in cash without going to the banking hall. You stand at the ATM and deposit money into your account. That is a financial service that the bank is delivering. Last time I went there and they said they are into partnership with Enterprise Insurance. So they are doing banker insurance services. That is a financial services that my banks are providing for me. I don't know what your bankers provide for you. I don't know what your insurance company provide for you, but it is a financial service that they are rendering. Now, when they provide those financial services, they deliver it to me and you. They deliver it to anybody who decides to partake in it. Recently, a friend of mine came from UK, and he was like, "Oh, P, when I'm outside, I can deposit money into my Ghanaian account, and the bank that makes it so easy for me to deposit money into the account is Access Bank. That is a financial services that they are rendering. So if you are even outside Ghana, you can still deposit money into your Ghanaian account, even though you are not here. So it was like all the other accounts, it's difficult to put money in. So I'm going to close all of them and maintain only one account, which is Access Bank. So that when I'm away, I can deposit money into that particular account. That is a financial service that the bank has produced. And as the bank has produced, they didn't produce it and keep it at the bank. They delivered it to the public. So if you are interested, you sign on onto their financial products. And interest rates were also determined based on demand and supply forces on the market. So when you talk about the financial system, this is how the financial system is. We look at the markets, we look at the institutions, we look at the rules and regulations, we look at the techniques through which financial instruments are offered on the market, through which financial instruments are traded on the market, through which interest rates are delivered and financial services are produced and delivered around the world. Now, what is the main goal of the financial system? Assuming we live in an economy where we don't have any financial system, it's just the economic system. If it's just the economic system, then exchange of goods and services is possible. But financial issues will be difficult, like the way we used to have the barter system. That is what the economic system is about. So if there is no financial system, how are we going to do allocation of scarce resources like that? It will be very, very difficult. So in an economy whereby the financial system is vibrant, one main thing that they do is that they try to allocate loanable funds to where it is needed most. And when we talk of loanable funds is money, is credits. Now, in life, there are two things. It's either you have something in abundance or you are in need of something. Now, when you come to the financial sector, in terms of loanable funds, at one point in time, you can provide loanable funds. At one point in time, you can also demand for loanable funds. As we sit here now, you guys, oh, you guys are evening students and weekend students. So a number of you are working. And as a number of you are working, I don't know whether some people have borrowed before. But if you have borrowed before, you borrow and you didn't go to your friend to go and borrow. I'm not talking about going to your friend to go and borrow. I'm talking about going to the banking sector or the financial sector to seek for a loan. Now you ask yourself, the loan that you went to seek for, where did the bank get the money? The bank got the money from me and you. The small monies that we have in our account, they repackage it, then give it out in the form of loan. So the financial system, one of their main tasks, one of their main goals is to move the scarce loanable funds from those who have it in excess, those who have saved it, like me and you. Now we have money in our account. We have gone to save those money. Now what the bank will do is that they'll repackage all this small money and give it to those who need money, those that their expenditure is more than what their income can support. Those are the people who go to look for loans because their funds are not enough to meet their expenditure. So they go to the banking sector, they go to the financial sector to go and seek for funds. For it can either be for expansion of our businesses, it can be for buying new stock into their firm. It can even be like individuals like us. We want to buy a car. We want to change our car. We want to buy iPhone Pro 13 or whatever. And you are going for a loan to go and buy iPhone Pro 13 Pro. That one, you have a problem. So you can go to the bank to go and borrow to do anything that you want. But if the financial system is not there, then you ask yourself, where are you going to borrow? If you go to a friend and go and tell the friend about your issue, will the friend be able to give the money to you? Now, even as the friend is giving the money to you, the friend is even scared. Will you pay back or you will not pay back? Does your friend have the necessary requisite to do proper analysis on you, whether you'll be able to pay the money or you'll not be able to pay the money? But when you go to the financial system have people that they have trained to assess people who are coming for a loan, whether they'll be able to pay or they'll not be able to pay. So the financial system is very, very important. And also that the global economy can also grow and the standard of living can also increase. It is the work of the financial system. As the financial system is moving scarce resources from those who save to those who are in need of it, at the end of the day, as I said, our standard of living keeps increasing. Now, if I don't have a car and I think that I need a car, I've gotten a job. Now, with the job that I have, I can go and seek for a salary loan to go and buy the car. Why am I going to seek for the salary loan? I'm going to the financial system to do that. The standard of my living will be enhanced because now I'm not going to queue again for petrol and again for taxi. All that I need to have is money to buy fuel. Now that the fuel prices has broken the 8 already, now they are going to even break 10. So the financial system is very, very important as it moves loanable resources, scarce loanable funds from those who have to those who are in need of it, so that the global economy can grow and the standard of living can also increase. There is even some school of thought that believe that it is the economic system that enhances financial development. Others also believe that it is rather financial development that promotes economic growth. And you can have literature to back all this argument. Now let's look at flows within the global economic system. What we discussed here was for the financial system. Now we are looking at the economic system. And in the economy, we allocate what? Resources. And the scarce resources that the economy tries to allocate is land, labor, management skill, and capital. Land, labor, management skill. In some books, you see it as entrepreneurial skill, right? And capital. Capital is the money that you need to use to start the business that you wish to do. So the basic function of the economic system is to try as much as possible to allocate scarce resources in terms of labor, in terms of land, in terms of managerial skill, in terms of capital to produce goods and services that society is in need of. As you guys have come to school, society is in need of educational facilities. Therefore, they have employed lecturers, they have employed administrators, they have employed security men to make sure that the student that comes to campus are very, very okay. They make sure that when students pay school fees, they get people to teach them. Society is in need of skill. Society is in need of labor. Therefore, they have engaged our services. And at the end of the month, our services that they have engaged, it is not for free. They will pay us. That is why when you guys paid your school fees, then all of a sudden, UTAC said they are on strike. And we went on strike for almost 6 weeks. And people were complaining, yes, children have paid their. Some of them were even lodging at hostels, and they were just spending their money anyhow. Meanwhile, the people who are supposed to teach you the labor, the managerial skill that you people need for you to be equipped, those people are on strike. And when such a thing happens, economic activity cannot go on. Productive activity cannot go on because there is a break in the chain. So the global economy generates what we call a flow of production in return for a flow of payment. So as the UTAC people are demanding for something, what are they demanding for? They are demanding for payment. They said they have the increase in condition of service, that is money. Why are we saying that? Because we are rendering a service that we believe that the service that we are rendering, the return that we are getting is not matching that kind of service that we are rendering. Therefore, we are demanding for better condition of service. Now, when you people also complete school, I always say level 400, I give you like 5 years. By 5 years, what other things being equal, almost all of you will be gainfully employed or will get something beneficial or profitable to do that will bring you income. Now, as you are working, as you wake up every day to go to work, you are rendering a service to the company that you are working with. And at the end of the day, they have to pay you. Those who upgrade themselves, after upgrading yourself, you will go and request for additional salary because you believe that you have added value to yourself. And once you have added value to yourself, the company that you are working must see that and increase your returns. But anytime you decide that I don't want to work again, then the flow of production or the channel has broken. So if you decide that I don't want to work again, then there is no way you are going to receive return for no work done. So the economic system is very, very important as it allocates scarce resources in terms of land. Land is very, very scarce. And you will know that all other economic production, economic factors are movable apart from land. So land is very, very important. Land is very, very important. You can move labor, you can move managerial capital, but you can never move land because land is an immovable resource, right? So for the global economic system to advance, we need to allocate these resources in an efficient way so that goods and services that we need in the economy can be provided at the right time and also in the right quantity so that there wouldn't be any shortage of economic goods on the market. Now, when such a thing happens, we say that the global economy generates a flow of production in return for a flow of payment because the things that the people are producing, the things that the company is the services that the company is rendering on the market, it is not for free. Once they render the service, the people that they are rendering the services to us, we pay. So at the end of the day, the circular flow of production and income is interdependent and it doesn't end. It ends when one decides that I won't do the work again. So when one decides that I will not work again, then there is no way you are going to receive any form of return. Please, are we okay? Somebody said I should slow down. So thank you. Now, this is how the circular flow of income, payments, and production in the global economy is. Now, can you see my cursor moving?
Yes, ma'am.
Thank you.
Yes,
So we
ma'am.
have the producing unit, and the producing units are basically the businesses and government, that is companies that produce. And the producing unit can be an NGO, it can be a sole proprietorship, it can be a partnership, it can be a company. Any entity that produces, that renders goods, produces goods and renders a service is classified as the producing unit. Now, when the company produces the goods and they renders the service, whom are they producing the goods and the services to? They are producing it to me and you, that is the household. So when you go to the market to go and buy Pepsi, when you go to the market to go and buy Wache, to go and buy Gobe, whatever it is there, it is the business that is producing that kind of goods or services on the market. And at the end of the day, it is me and you. We consume those products that has been produced on the market. Now look at the arrow. There is an arrow from the consuming unit to the producing unit. Now, in this arrow, it says flow of productive services. Now, who renders the productive services? It is me and you that we are working. We render the productive services. So as I am teaching now, I am rendering a productive service that at the end of the day, I am going to receive a salary. Are you with me?
Yes.
Thank you. Now, as we render the productive services, as I am rendering my services to UPSA, as somebody is also in the production firm, like a manufacturing firm that produces, let's assume somebody works at Nestle. Nestle is a production or a manufacturing firm. So when you finish school, you have been employed at Nestle, and when you go there, you provide what productive services to Nestle. Now, all the activities that you'll be doing there, the goods, when you finish producing the Milo, when you are done with the what other things that Nestle produce, the oil, the Milo, all those kind of products, it doesn't stay at Nestle. It comes back to what? The individuals. So you see flow of production of goods and services back to which people? The consuming unit. Please, are you there? When you get a job at the bank and you are going to work, you are here. You are a consuming unit. So as you are going to work, you are what? Rendering the productive service to whichever bank that you are working with. UPSA, which bank is close to you? Access Bank, right?
UNB.
Access Bank.
Okay, but ask where you have the immediate one is Access Bank, yes, right?
Yes, please.
Yes. So assuming that all of you are working at Access Bank, right? So you are providing what? A service, productive services to Access Bank. Now, as you go there to work, which people come there to come and enjoy the services? It is the same consumers.
Yeah.
So as you go there to work, the work that you are doing, you are serving consumers. So as we are going to Access Bank to work, we are providing what? A service to them. Now, this service that we are providing to them, it comes back to what? Another form of consumers. So flow of production of goods and services back to consumers. When people go to Nestle to go and help in the production of Pepsodent, in the production of Milo, in the production of milk, at the end of the day, it is me and you that we buy the Milo, that we buy the Pepsodent, that we buy the toothbrush. That is what this act talks about. Now, when we go to the firm to produce or to render our productive services, like the way I am teaching, at the end of the day, the government is here. The government must pay me my income. That is, so you see that the flow of income moves from government here, then it comes to where? The consuming unit. Please, can you see that? Now, at the end of the day, when the consuming unit also receives the income, you also what? Consume. Then what do you consume? The productive services the production of goods and services that you are enjoying, you pay for it. So flow of expenditure for consumption and taxes from the consuming unit back to the producing unit. So when there is a break, then the flow of income, payment, and production ceases to exist. Once I decide that I will not work again, then flow of productive services will cease from my side. Then there is no way the government is going to pay me any money. Now, if the government doesn't pay me any money, there is no way I'll also get money to spend on what the goods and services on the market. Please, are you okay?
Yes.
Yes, madam.
Yes, madam.
Thank you. So when you get that, when we ask you to, hey, you people didn't even hear what I said, and you said yes already. Will you be able to explain the circular flow with a diagram? Please, the weekend people, somebody should put that question down for me. And I said a weekend. All of you write the question. The class reps, I will demand my question one day. With a diagram, explain how the flow of income, payment, and production is done in the global economic system. Okay, so the role of markets in the global economic system. Markets.
Madam, please, the question again.
I cannot even repeat because it's from my head.
I can say it.
Okay, then say it, please.
We said with the diagram, explain how the circular flow of income, payment, and production in the global economic system is.
Thank you. Please, do you get it now?
No, please.
Madam, please, it has been recorded, so we will put it on the page.
Okay, so the role of markets in the global economic system. Markets is a place where buyers and sellers meet to transact business. But most economies around the world rely on markets. If market is not there, allocation of resources will be very, very difficult. Where are you going? Even the financial system is a market. Just that market is not a physical market that you can see, but things are being done on the financial market. So the market brings buyers and sellers together. The market helps in undertaking a lot of complex services or complex activity. And the market is not static. The market is dynamic. So if you knew the market yesterday, today's market might be different. If you know the market today, tomorrow's market will be different. So the marketplace is a very dynamic place. It is not static. Then the market determines what goods and services will be produced and in what quantity through their prices. Now, if somebody wants to enter into business, I don't know if some of you are doing international finance. Sometimes, if you want to penetrate into a different territory, or you want to go beyond your domestic environment to an international market, theory says that it is not good to just go and establish your company there. You need to survey the market very well. If you have started already in your domestic environment and you intend to go to the international side, the best thing to do is try to do import and export. So try to export some of your goods to the international market, the country that you want to do business there. Try to see if the people there will accept your product or the people will not accept your product. If they accept your product, then it means that you can go ahead and establish your firm there. But if people are not accepting the product or the goods and services that you are producing in that environment, then there is no need to produce more. You need to minimize your production because the market is not ready to accommodate you. The market is not ready to patronize your product. Therefore, you need to minimize the quantity of produce that you do on the market, else you will be in losses. So the market determines what goods and services should be produced. If you are producing and people are not buying, why would you produce? It's like somebody who sells food. Your food is not good, and every day you are cooking to bring it on the market. Whom are you going to sell the things to? Because people are not buying. So at a point in time, you'll be fed up and you stop selling the product on the market. But if your product is good, those who sell good food, at the end of the crumple and soto, we have this watch seller at Tantra Hill. That place, that woman, by 9:30, if you go, the watch is finished. 9:30 in the morning, her food is finished. The food is highly patronized. Highly patronized. This tells you that the woman food is very, very nice. So if the food is very, very nice, then the market is telling you that, oh, this woman's food is good. So what do? Produce it in large quantities. Now you can even price it. You can, when you go, the woman will tell you that there is, she doesn't dish 3 cedis. She dishes only 5 cedis. Now from 5 cedis going, if the food is good and you buy 5 cedis and get value for money, won't you buy? It will be better than going to buy 3 cedis somewhere and not getting value for money. So the marketplace determines what goods and services will be produced and in what quantity through their prices. Now, market also distributes income by rewarding superior producers. If you are good at what you do, people will chase you. And once people are chasing for your product and for your services, at the end of the day, your profit margin will also increase. If I am good in what I do, and a lot of people are hiring me, at the end of the day, my wages will increase because everybody wants to use me to do their goods or to produce a service or to produce a good for them. It's because I am offering a superior services. And once I'm offering a superior services, at the end of the day, I'm going to enjoy higher wages and salaries than the other person who is not offering better services. I normally advise you the level 400 that there is this course, the Ghana Stock Exchange. Those who wish to move into security trading or to be a broker or to work with a brokerage firm like Data Bank, Melbourne Brokerage, Gold Coast Securities, if you have that kind of ambition, then Ghana Stock Exchange has some courses. When you write those courses, you become a broker, so you can trade. Now, if you write that paper, I think it's about 3 levels or 4 levels. If you write and you get your certificate, in addition with the degree that you have, there are other people who have only the degree and do not have that kind of certificate. You have an added advantage over them. So if the two of you, imagine that all of you had the same class, all of you have the same capabilities, because you have additional training in securities trading, you are going to command higher services. You are going to command higher wages than the other person who is only offering his or her degree. So normally I always encourage that if you have the chance that I know you have, go and do that course and add it to your certificate, enrich your certificate so that when you go on the job market, you are going to benefit with what? Higher wages and other economic benefits. So note that the marketplace is a dynamic place. The marketplace also distributes income by rewarding superior producers. And by rewarding superior producers, how do they reward superior producers? Because their production of goods and services is good. People patronize it. the demand for their product is very, very high. And as more people are patronizing your product, your returns that will be coming in is very, very high. To expand your business, you tend to employ more people into your business. So at the end of the day, the profit that you are going to get from your business will be more than somebody who produces inferior products on the market. If you produce inferior products on the market, first time I'll buy, but second time, will I come back again? No, I'll not come back again. But if somebody produces a superior product on the market, first time you go, second time you go, third time you go, you go consistently as long as you are in need of that particular product or particular service. And at the end of the day, the firm that is producing that service or that good is going to enjoy higher profit. Now, there are 3 types of markets that we have. Three types of markets. We have the factor market, we have the product market, then we have the financial market. The factor market allocates the factors of production, that is land, labor, and capital, and also distribute income to owners of the productive services. Now, when you talk of the product market, they are the producing unit. So they produce. And when they produce, the consuming unit use most of their income from the factor market. So it tells you that the consuming units are in the factor market. They use whatever reward that they get from the factor market to purchase the goods and services that is being produced in the product market. So you guys, sometimes I think that you are mourning people. Some of you are paying your school fees. And where are you getting the money from? You are getting the money from wherever you work. So as you work and you get salary, as you work and you get income, you tend to buy goods and services on the market. And the goods and services, where are you getting it from? We are getting it from the product market. So UPSA is a product market. We are rendering a service on the market. At the end of the day, when you go and buy Milo, when you go and buy any kind of product on the market, the money that you had from the factor market is what you are using to buy on the product market. That tells you that if you don't work here, there is no way you are going to get money to buy from the product market. That is why those who don't work, those who are always in the house, they have to be dependent on people before they can enjoy goods and services that is being produced in the product market. Then you have the financial market, which becomes a channel savings to those individuals and institutions that need more funds for spending than are provided by their current income. So all that the financial market does it helps in allocation of scarce resources from the surplus unit to the deficit spending unit. So we have this sketch. Now, let me take it from here, from the horizontal before we go to the vertical. So you see here, we have the producing unit. And the producing unit are the businesses, they are the governments, they are the NGOs, they are the sole proprietorship, they are the partnership firms, they are the companies. So any company that produces, any company that renders a service falls under the producing unit. Now, when they produce the goods and services on the market, it is me and you that we enjoy that product or services that the producing unit is rendering on the market. Now, in the middle here, we have the financial market. So the financial market becomes a betweener between the consuming unit and the producing unit. So when you look at the arrows that connect the financial market to the consuming unit and the producing unit, you see that it is a two-way direction. Now, the consuming unit, see here, you see flow of savings, and you see flow of financial services, income, and financial claims. Now, The consuming unit, like me and you, we save, we put money at the bank. So after working and getting our income, after spending, the little that is left, we put it in the financial system, or we put it at the financial sector in the form of savings. Now, when you put it there in the form of savings, then they to channel it towards the producing unit in the form of what? Loans. That is what it means. Now, through what means do we put our money here? Flow of financial services, income, and what? Financial claims. Now, the financial market offers different types of what? Products on the market. Now, these different types of products on the market that they offer, who buys them? It is me and you. We buy the financial claims on the market. We open the account. We buy the treasury bills. We buy all the other financial services that the banks and the financial system, the insurance companies, the microfinance people, they render us on the market. And at the end of the day, we put depending on the type of instrument, they give us a return for that. If it is a treasury bill, we get returns on it. If it is a stock, we get returns on it. But if it is a mere savings, normally mere savings, you don't really get any amount of any significant interest on it. So the financial system also produces financial products on the market. That makes us to buy those what, or to save our money in the financial sector. So it is a two-way affair. As you are putting money at the bank, the producing unit also go for it in the form of loans. There's the same way that the producing unit and government, when they get money after paying dividend, after paying their expenses, the little money that is left, they also bring it to the financial sector. So it is not only the consuming unit that put their money in the financial sector, the producing unit also saves at the financial sector. Please, are you okay?
Yes,
Yes, madam.
yes, madam.
Okay, thank you. Now we have the product market here, and we have the factor market here. So our companies is here, they are producing. And who is rendering the service? It is me and you. So we find ourselves in the factor market. So there is a channel also between, you see, the product market, financial market, and the factor market. Now, let's look at how the arrows can be explained. Can you see my arrow from here? They're down here. You see, from the consuming unit to the factor market. Now, the consuming unit, what do they provide? They provide productive services. So this evening, I am rendering a productive service. So the productive service, I'm rendering it to who? I'm rendering it to UPSA. And UPSA finds itself here. UPSA finds itself here. Are you with me? I am rendering a productive service, and the services is going to UPSA. UPSA is a producing unit. They render services. They don't produce a product on the market. They render service. Now, with the services that I am rendering to UPSA in the form of productive services, UPSA must pay me. So you see flow of incomes from UPSA, it comes to who? It comes to me here. Are you okay?
Yeah.
Yes,
Okay,
madam.
I'm talking to myself. Okay, so once we render the individuals here, we render the services at the factor market. So I am going to work. I'm going to work. I'm working here. So the work that I am doing, I'm providing a productive services to UPSA. At the end of the day, UPSA must pay me for my services. So the income comes to me. Now, the productive services that I rendered, at the end of the day, we were producing something. So there is a flow of production at where I work, the product market, that is UPSA. So the flow of production is in the form of what? Teaching. That is the goods and services here. So assuming that we have Nestle here, then the services that we render to Nestle, we are going to produce Milo. we are producing milk, we are producing toothpaste, we are producing Pepsodent. So that is the goods and services. And when we produce those goods and services, it comes back to what? The consuming unit, me and you. That is where the goods and services come back to. Now, when it comes back to us, we don't take it for free. So you see that we see here flow of payment for consumption and taxes. And the things that we consume, there are taxes on it. Right. So once we consume that goods or services, we pay. So you see flow of what? Payment back towards the producing unit. So it is a cycle that never ends. That is why we say that they are all interdependent. So at a point in time, the consuming unit will be in need of money. They'll go to the bank for money. The producing unit will also be in need of money. They'll also go to the financial market for money. So these are the main types of markets that we have. So how do we get savings? How do we do investment? Me and you, most of us are working. You cannot save if you don't have income. I didn't say if you are not working. Everybody and where they get their sources of income from. Once you get some source of income, when you are able to deduct your taxes, when you are able to take care of your consumption expenditures in the form of your daily activity, whatever is left is your savings. So if at the end of the month, I receive 2,000 cedis, now I take all my expenditures from it and I'm left with 500 cedis. I put the 500 down. Next month, I save the same. As for next month, you cannot save 500 because our expenditure will go up. Now, TNT is like a cocaine on the market. It's more because prices of fuel has gone so high, and those who also go to people's house to go and eat raw from stop. So stay in your home. Now things are very, very expensive on the market. So if January you used to save 500 cedis, today you cannot save that kind of 500 cedis because our expenditure has gone up. And once our expenditure has gone up, it will affect our savings, right? But what we are saying is that if you don't get income, you cannot save. As a business, where will a business get money to save? When a business declares profits, they pay their shareholders their dividend. Whatever is left, they retain it in the firm. Then for government, a government can save from their revenue. But African government always, their expenditures are always more than their expected revenue. So you always see African government or most governments, they are in debt. Now, the more you are able to save, today I save, tomorrow I save, the next day I save. At a point in time, I will get enough money. Then I will now go and buy the land that I want to buy. I'll now go and buy the laptop that I want to buy. The men, you can save to marry a woman. That one too is also an investment. So today you are saving. Tomorrow you take that savings to go and do investment. Go and buy a car. Go and buy a house. Go and buy a home. Anything that as an individual, you think that this is what I want to invest in. Until you save, there is no way you can do investment. Unless maybe I could do to the and so I didn't boom sana umesika so now they are kwakoye a Japan. Then businesses too, they invest into capital goods and inventories. So as the business have been able to save more, they can take the money for expansion. They can take the money for investment, like maybe going to open a new branch, or there is a new product on the market, or the firm wants to bring out a new product line. All these are investment. Then for governments can move into their fiscal policies Fiscal policies deals with the building of roads, construction of roads, building of hospitals, building of schools, like school feeding program. All those things are government programs that they need enough money to undertake. So until our savings move to a certain stage, it will be difficult for us to achieve our investment goals. Okay, so the financial market enable exchange of current income for future income. Why are we saying it enables current income for future income? Because the financial market creates an avenue for savings. So as the financial market creates an avenue for savings, helps in transforming our savings into investment. That is what it means. So today or every month, I'm able to deposit 500 cedis into my account. At the end of the year, I'll have 6,000 cedis. That's 6,000 cedis. When I take the 6,000 cedis, at least maybe when I go to my village, I can buy a plot of land. In Accra here, I don't know what 6,000 can buy. I don't know if 6,000 can buy a plot of land, but at least it can buy a half plot or something like that somewhere. So the more I save in the financial system, I save in the financial sector, it is transforming my savings into investment one day. And also, it also creates an avenue of employment. Income can grow and standard of living can also improve. Now, if you're able to save every month, and you decide to go and buy a land, give yourself like 5 years. After 5 years, you can even move into your own house without renting again. So the financial system or the financial sector has helped you to be able to save small, to be able to move that savings into investment. And the investment, what did you invest in it? You were able to buy a land from that. You were able to buy blocks. You were able to buy cement. So after 5 years, you have transformed your life. Your standard of living have improved. Please, do you understand what we are doing?
Yes, please.
Thank you. So the suppliers of funds, like me and you, that we have opened an account, and if nothing at all, at least about 1 cedi or 2 cedis, they are in there. So we are classified as the suppliers of funds, or we are classified as a surplus spending unit. So the suppliers of funds to the financial system expect not only to recover their original funds, but also when I put my money at the financial system or at the bank, I want to recover the amount of money that I have put there in the first place. Then the bank must also promise me an interest rate. So there must also be a reward, and the reward is the interest rate. That is the compensation that I am going to get for not consuming my money at the current level, but leaving the money at the bank for some period. I must be able to earn a compensation on that. And also, as I left my money in the financial system, I put on myself unnecessary risk. So I must also get a reward for that. Now, somebody go and buy treasury bill. Then the person gets a rate of maybe 10% per annum, right? That is for the whole year. Then another person also takes the same amount of money to NAN1, and the person gets 10% per month. What is bringing the difference? The difference is here, the risk involved. At NAN1, the risk involved is very, very high because the probability that the firm can fail in payment of the principal plus the interest is very, very high. But for treasury bill, the probability the government will fail in the payment of the principal and the interest is very, very low. Therefore, the interest that you are going to get on your treasury bill for waiting will be lower than what somebody is going to get at NAN1, because NAN1, the risk involved is high. So as individuals, as consumers, as financial managers of our companies, as we patronize financial products, we are not patronizing it only to get our principal back. No, we are patronizing it so that at the end of our investment period, we'll get a reward for waiting and also assuming unnecessary risk upon ourselves. I hope you're okay. Okay, so this is a financial system. These are the demanders of funds, the surplus spending unit, and this is the this is the deficit spending unit, and this is the surplus spending unit. And the surplus spending units are mostly household. The deficit spending units are mostly businesses and government. So you see, there is a two-way of a surplus spending unit. There is a flow of loanable funds, right? And there is a flow of financial services, income, and financial claims to the surplus spending unit. So you ask yourself, your banks, what kind of services have they provided for you? Based on that, you went to open an account with them. That is the financial services that we are talking about, right? Okay. Functions performed by the global financial system in the financial market. We talk about 7 main functions. Now, the financial system or the financial market provides an avenue for savings so that me and you will not leave our money under our pillows or dig a hole and put the money there. But we rather take the money to the financial market to buy any financial product or services that the financial system is rendering, that we believe that it can help us to enhance our standard of living. Then, the more we also save, we are accumulating wealth. We are accumulating wealth over a period of time. So the financial instruments sold in the money and capital market provide an excellent way for us to store our wealth. We don't put the money in our home. So as we are saving, we are increasing our wealth. As we are saving, we are increasing our wealth. Then they also provide liquidity. One of the characteristics of a financial instrument is that it's easy for you to transform the asset into cash. Now, if I have 100 million treasury bill and I also have a land worth 100 million, and today I'm in need of money and I want to liquidate any of them, getting somebody to buy the land will be very, very difficult. Wow. And even you see that even human beings, when you are in dire need of money and you are selling your fixed assets, you don't even get value for money. But if it is a financial instrument, you just go to your bankers and tell them that you are selling off part of your financial asset at the market price. So liquidity is very, very important. The financial market provides liquidity for me and you who have patronized the financial instrument and we are in need of cash. We just go to the financial market, and the financial market, whom are you going to? For me, maybe I'm going to my bankers. Another person will go to their brokers because maybe they bought a capital market instrument like shares. So you go and tell your brokers you want to sell part of your shares and raise money to pay your school fees. Then they also provide a credit function, an avenue for us to go and borrow to do investment purposes, for consumption, to finance our consumption or anything. As I always say, that level 400, and normally I always say 5 years. In 5 years to come, when we see some of you, we will not be able to recognize you because life will be so good for you. You stand in a position whereby you can borrow huge amount of money to undertake any project that you intend to do. So the financial market or the financial system provide credit avenue for us. Then also they provide payment function. Now, you don't even need to carry money on you of late. The fintech industry has developed so much that mobile money is everywhere. Even sometimes when you even go to the supermarket, if you don't have mobile money and you have your debit card, your ATM card, they have what you call point of sale device. You just slot in and you pay. Now, if I render a service to somebody, if somebody renders a services to me and I don't have cash to pay the person, I have a checkbook, I can issue a check for the person. And that is a payment function that we are talking about. Then you have the risk protection function in the form of insurance. insurance companies are part of the financial market or the financial system. So they offer protection against life, health, and property, right? In selling of various insurance products on the market. So the one that you think will be okay for you, you tend to buy it so that when the unforeseen happens, the insurance company will reinstate you back to your former position. Then the last function that they perform is the policy function, through which governments use it to stabilize the economy and avoid inflation. How do they do it? They do it through the Monetary Policy Committee. In Ghana here, we have the Monetary Policy Committee that meets every 3 months to assess the market, revise the policy rate on the market, and see, are they increasing the policy rate or they're reducing the policy rate? So the financial markets are a channel through which governments may attempt to stabilize the economy and avoid inflation. So these are some of the services that are widely sought for by the public: payment, trade services, insurance services, credit services, agent services, agency services. The last thing is the last but one. We have types of markets. You see, when we were introducing what the financial system is, we said it's a collection of markets. So the market is not just one market. We have different types of market. We have the money market for short-term securities, a year and below. Then the capital markets for long-term securities like bonds, like mortgages, like shares. And the shares, you can have ordinary shares or preferred shares on the market. So you can also, some of the instruments on the money market, you can have treasury bill, certificates of deposits. You'll be calculating all these things. Like when I think when you come to face, you'll be doing calculations in all these areas. So these are some of the instruments on the money market and also on the capital market. Then you have an open market, negotiated market. We have a primary market. You also have a secondary market. Then there is a spot market for immediate delivery. So when we go to the market to go and buy food, we pay. That is a spot market. Normally, in terms of businesses, the spot market is within 1 to 2 business days. You have to settle. Now, for the futures, you also have to go to the derivative market. And under the derivative market, you have different contracts under the derivative market. That is why we have the futures, we have forwards, we have options. The last one is not here. We have swaps. So these are instruments on the derivative market. And the derivative market are market that we use to hedge against our unforeseen circumstances, our position. So if you believe that the prices of dollars are going to rise in the future, you can take a position by hedging against the prices of dollars. So that when the price of dollars rise, you wouldn't buy it at a high price. Then you can use what you call futures or forwards to hedge. You can use forwards or futures to hedge against your position. So they are instruments or contracts that you enter into it today, but delivery is done in the future. And as I said, the derivative instruments are used to manage risks, perceived risks on the market. But for the spot market, it's for immediate delivery. The futures market, the forwards market, is for future delivery of financial products. And it is not only financial products, but because you are looking at within the financial system, that is why you see financial instruments here. When you are looking at it out of the box, it can be any instrument. You can even have cocoa, you can have oil. As the prices of fuel is going up, people are saying that why don't we hedge against the prices of fuel? the prices of crude oil on the market, so that we will not be buying it at a high price, but we'll be buying it at the arranged price with a particular dealer. Then you have options. An option gives you a right. It is also a contract that gives you the right to either buy or to sell certain securities at a specified price within a certain time frame. That one too is also a derivative instrument that you enter into the contract today, but delivery is done in the future. Now, you see, we said we have different types of markets. Even here, we've talked about money market, capital market, open market, negotiated market, primary market, secondary market, spot market, futures market, forward market, options market. Now, all these markets have its rules and regulations that governs it. So under normal circumstances, what goes on the spot market should not be so much of importance to what goes on the futures market. What goes on the open market shouldn't affect what goes on the negotiated market. What goes on the primary market shouldn't affect what goes on the secondary market. But in real life, it is not so. There are some things that tie or bring the financial market together. There are some things that bring the financial market together. And in our slides here, we talk about four main things. Credit. Now, let me give you a typical example. Assuming that I want to go in for a loan, and my bankers are Barclays Bank, now ABSA. Now, I go to Barclays Bank, and they put a loan rate of 30%. Okay, let me go to other banks too and see. I go to EcoBank. Then EcoBank quotes a rate of 29%. Then I go to Ghana Commercial Bank. Commercial Bank quotes a rate of 28.5%. Commercial Bank is different from EcoBank. EcoBank is also different from Barclays Bank. But as a rational borrower, I would like to go to where the interest rate is very, very low. So what happens on the market is that this financial institution will try to all of them align their interest rate at the same rate so that it will prevent borrowers from shifting among the market. I hope you understand. Okay, it looks like I'm talking to myself.
We understand.
Speculation and arbitrage. Speculators are people who gamble on their market forecast. So, see the way that, last week I was teaching. Then, as at last week, the fuel price per liter, it was 8 point something. And people were speculating, oh, I didn't wait to be able to do 10 cities. And to be able to, most I didn't do 10 cities. That's what you call speculation. And the dollar to see the one near Malcolm, dollar boy by dio, but I'm sure maybe a dollar so see no dollar and so edu. So we have people, right, speculators, they gamble on the market forecast. And if you have people who talk and it goes far, the things that they say can have huge influence on the market. You know, now people are looking for Baumia. Where is Baumia? Where is Baumia? Baumia says that if your fundamentals are weak, your exchange rate will expose you. Sometimes the fundamentals might be correct, but still the exchange rate is not good. Sometimes sentiment is a factor. Like the way you see the name of deal, Ghana deal, Ediane boy deal. Baby, because everybody is crying. The person will increase its prices. That is what sentiment can do. So now we are in a system whereby everything is expensive. So once everything is expensive, even the person who bought things at the lowest price, because things are expensive on the market, the person will increase their prices because the sentiment on the market is driving prices of goods and services up. That is what the speculators they do. So they gamble on their market forecast, and speculators look ahead and say that, oh, this is what is going to happen in the future. And as they are saying this is what is going to happen in the future, you see that the market at a point in time go along that line. Then we have arbitrage. And arbitrage is a situation on the market that you see discrepancies in prices of goods and services. Now, I went to the market on Wednesday to buy rice. Now, Lily rice on the market was 52 cedis. The same Lily rice, when you go to Melcom, it was 60 cedis. Now, as an arbitrager, that I have seen that the rice on the market is 52 cedis, and Melcom is selling it at 60 cedis. What I'll do is that I'll go and buy rice from the market at 52 cedis. Then I'll go and sell to the Melcom people at 60 cedis. Will I get profit from it?
Yes, but yes,
I get a profit of 8 cedis. And this 8 cedi profit, there is no risk involved, because you are sure that as you are buying it at 52 cedis, you are going to sell to another person at 60 cedis. That is what we call an arbitrage profit. So when the financial market sees that there is discrepancies in the prices of goods and services on the market must align itself so that these discrepancies on the market will be eliminated. So at the end of the day, the rice being sold at 52 cedis somewhere, Melcom must also sell the rice at 52 cedis. Else, somebody will buy it at 52 cedis somewhere and go and sell it at another place at 60 cedis. Now, let me give you another example. Initially, in Ghana here, those who are into forex trading, Forest Bureau Forum. First, now board, no they see abontain. Then they list the prices of the securities there. So dollar is ABR 8 cedi. You buy at 8 cedi, we sell at this. Pounds is this. Euro is this. SEFA is this. Of late, they have stopped. What people were doing is that people were going around. Now they see at Forest Bureau A that, oh, dollar is being sold at 8 cedi. Now they go to Forest Bureau B. Dollar is being sold at 7 cedi 50 pesos. So they will buy dollar at 7 cedi 50 pesos, go to Forest Bureau B and go and sell it at another place at what 8 cedi and get a risk-free profit. Now, when such a thing exists on the market, it is not good. People take advantage of that discrepancies on the market. So the market must find ways and means to align itself so that there will be some consistency on the market. And when that thing happens, that profit that the speculators and the arbitragers people are getting, it will now be eliminated. Now the market will now be in an equilibrium. I don't know if you, the banking student, are you doing international trade?
Yes, madam.
Okay, so if you have not started the arbitrage, you discuss it. You discuss international arbitrage, locational arbitrage, triangular arbitrage, then interest rate arbitrage. These are the 3 types of arbitrages on the market. So the arbitrage deals with discrepancies of prices. Then we also have perfect and efficient market. Research evidence suggests that financial markets are closely tied to one another due to their near perfection and efficiency. That is what research shows. But in the real world, it is difficult to attain market perfection. There is a lot of information asymmetry in the market. And information asymmetry is whereby one person has more information to the advantage of the other. Imagine they are going to increase fuel prices, and some people know. Those who know will fill their tank today. So the next day when we wake up, we don't know. we will go and buy the fuel at the expensive price. Is the market efficient? The market is not efficient. Is the market perfect? The market is not perfect. So it is quite difficult for the market in real world to attain market efficiency or to obtain perfect market. And when we say a market is efficient and a market is perfect, then it means that all information must reflect in the prices of goods and services. Now you ask yourself, is it possible for all information to reflect in prices of goods and services? It is very, very difficult. Is it possible for every consumer to have knowledge about the product that they are buying on the market? It is very, very difficult. So in the real world, to obtain a perfect market and market efficiency, it is quite difficult. The last thing that we talk about is a dynamic financial system. The financial system has been changing rapidly. I remember when I opened an account for the first time at Barclays Bank, that was somewhere 2003. I used my school fees to go and open the account because the minimum requirement that they were expecting was 1 million cedis. There is no way I'll have a pocket money of 1 million cedis to go and open. So I used my school fees to open. After that, I withdrew the school fees to go and pay. Now today, because of market integration, because of competition, now when we even open, when level freshers comes to school, the banks moves from the confinement, from the comfort of their places, then they come to the doors of students who have nothing to put in the account. That is how far the financial system has changed. That is how far competition has brought what has brought dynamics into the financial market today. Today, you can sit in your home and transfer money to another person through your bank. Initially, it wasn't the same. So the financial market is not static, it is also dynamic. And the trend towards global integration of financial system has also been able to be achieved, right? We call something gradual deregulation of the financial institutions and financial services. I told you that a friend of mine in UK can deposit money in Ghana here. Even sometimes you ask your friends outside to send you money, and just a click of a button, it comes onto your mobile money. So that is how far the financial system has changed. And now we have what we call a global, it has always been there, a global village. And this dynamic has come about as a result of what? Intense competition. As more new financial products and services have been rendered on the market, it's the same way the risks involved has also gone up. Recently, when the banks collapsed, we saw a lot of banks merging with other banks, right, to remain strong on the market. So that is that for the dynamic financial system. This talks about how the course has been planned. Today we are done with the part one. Tomorrow, next week, we look at forces that shape interest rates and security prices on the market. So this is into 7 parts. We are not likely to finish all, but you cover a large number of it. So today, what have we done? We looked at the global economy and the financial system. We talked about flows within the economic system. We talked about markets in the global economy, the types of markets we have, the financial markets, how it channels savings into investment, the functions of the financial system, then also the types of financial markets we have, then the factors that tie the market together. Then we also talked about the dynamic financial system. So that is what we have done today. And this brings us to the end of our class. Any question?
Hello.
Yeah.
Auntie, please, can we have the lecture slides?
I'll send it to you right away.
Okay, please. Thank you very much.
You're welcome. So if you don't have anything to tell me, can I end my class?
Yes.
Yes, madam.
Yes, Auntie.
Okay, Heavenly Father, we thank you for bringing us to a successful